All right, everyone, welcome to another episode of Docs Outside the Box. I am your host, Dr. Nii.
This is Dr. Renee.
Hey, remember, this is a fusion of money, medicine, and pop culture. So before we jump into our money trap for today, our money trap today is going to be insurance, whether you have too little or too much insurance, or how do you even get insurance?
Or none at all.
Let's give a quick shout out to everyone who's joining us on YouTube. We want to thank you all for joining us on YouTube. Alfred, please, can you put down how they can subscribe to our channel?
Now.
We are doing an extra push, trying to get as many people subscribed on our YouTube channel. You know, YouTube is changing their algorithms. They're trying to push more video podcasts out there. And, you know, the more eyes on us, the better.
That's us, video podcast.
There you go. To all the audio listeners, hey, we still got love for you. We love you guys. We call you guys the day ones. We definitely appreciate all of you. But just want to let you know that the video experience is really different. Mm-hmm. We put a lot of work into it, the visuals.
Yep.
And, you know,
and if you are on the video right now, you'll see we have new mics.
Yeah, we got some new mics. We're going to get into that in a different video, but we've upgraded our mics a little bit to get a little bit of a better audio experience. I'm still working my way through trying to make sure that all the connections are right. But for this episode, I hope you guys hear us, and I hope you guys hear a difference because we put some money into this.
You gonna hear a difference.
We put some money into this, so we hope that you guys can hear the difference. One other thing also is listen, we consider you guys all family, and we want to, you know, just give a shout out to all the new listeners out there.
Yay.
Particularly the listeners that we picked up from our most recent, I'd say, live episode that we did at Northwestern University, specifically the business school, Kellogg Business School, which is a top 5 business school in the world. We were super psyched to be to be invited to come and speak up there for their Physician CEO program. Remember, Physician CEO, this is a business immersion program that's giving you all the tips that you need to become a physician leader, all the things that you need to do to run your own practice, to lead your division, whatever you need to do in medicine, whether it's clinical or business related. You're going to get this experience at Physician CEO. So being able to be invited to not only do a session where we taught people from all over the world about podcasting and how it can help their clinical practice, but also we did the keynote together. And we didn't do it like no regular
Nobody was standing at a podium, y'all.
Nah, I don't do podium speaks or podium talks. I don't do any of that stuff. I don't do PowerPoints. I don't even like doing PowerPoints. But
pretty much any PowerPoint that you ever show, I've done it.
Basically, I'm not a PowerPoint type person. I got to be real with how it is, right? I tend to read off PowerPoints, and I think that's boring. So I try not to do that.
Yeah.
But we did it as a live session, right? Mm-hmm. So imagine, like, not a camera here, but like 50 people looking at us.
Sitting here in our studio right now, chiming in on our live podcast.
So real quick, before we jump into the episode, give me your initial impressions of that experience.
Oh, it was great. I loved it. You know, having a live audience was definitely different. The fact that the audience could talk back to us, for me, I just loved it. I love audience participation. So, you know, for me, if anybody out there wants to invite us to do a live podcast, I'm there. Just make sure it's at a time where I can leave my kids somewhere. So
that is true because our kids.
Can you come back on Tuesday at noon? No, I can't.
Our kids will tear your shit up. So just let you know that. So my impressions are 2 things. One, you really do change the way I change the way in which I deliver things based off of their how they respond.
Yeah, the
It almost feels like I'm a comedian, right? And like you're testing out jokes and you're seeing how they respond and all these different things. And then also at the same time, I could do it all day. I love talking to an audience, to a crowd in this way. I was very comfortable doing this.
Yeah.
I had to get my cough straight. You know, I kept coughing. And you could even tell even on this show, like I still have an issue with coughing and so forth. But, you know, we're going to get through it. But I enjoyed it.
TI is.
So look, let's jump into it. Today, we're going to do money trap number. I don't know what it is, but we're doing money trap on insurance, whether having too little or too much. But what we noticed is, you know, physicians out there either are sold too much insurance and they use it to not only protect their lives, but also use it for investment opportunities, which make it very, very, very expensive when there are cheaper options. or they don't have enough. A major life event occurs, whether they can't work anymore or they just die. And now they have dependents, they have kids,
Right.
maybe they're in a business, and who's going to be able to, or where is this income that, so many people are relying on from your staff
Yeah.
to your family?
That income just
Where
stops.
are they going to get that from?
Yeah. Well, you were telling me the other day about what's the guy's name from Friday?
Ezel. Yeah. So, or Anthony
Like, name
Johnson.
is
Anthony Johnson. He was Ezel. You remember? So,
My neck and
Alfred,
my back.
Alfred, put that picture up of my neck and my back. But if you haven't seen Friday, there's an amazing scene where Smokey and what was Ice Cube's?
Craig.
Craig and Smokey go into
A
the
bodega.
store, and basically Ezel he's trying to get money from the store,
Yeah.
right?
He's basically
and
trying to
he
get
acts
money
like he
from the store.
falls. He acts like this is a disability claim, and he says, my neck and my back. But it's an amazing scene. But anyhow, he ended up having an actually really good movie career. He ends up dying like 2 years ago, and then shortly afterwards, we find out that his wife puts out a GoFundMe page trying to raise money on how to bury him.
Yeah, for funeral costs.
Funeral costs.
Yeah.
It's like, wait, how are you in all these movies? Aren't you getting royalties from all these different things? Maybe Friday and what have you. And lo and behold, they didn't have enough to even bury my man. So
Yeah. I mean, it just makes me wonder, fine, you don't have money for the funeral. What are the expenses now, right? The living expenses that his family has to deal with that maybe perhaps, his income was covering.
Right.
And now with that income being gone, what are they doing?
right.
You
Because,
can't GoFundMe your whole life.
well, some people do.
Well,
Some people do, but it's rather shocking. It's going to raise eyebrows when people are like, wait, hold on a second. Like, I remember watching you in the 90s, or I remember still watching you on whatever channel it may be. How is it that we need to be fundraising for your funeral, fundraising for your life? So that part was kind of a trip. And, just want to let people know, like, particularly the docs out there, I deal with life and death on a daily basis. Some of you all may deal with that, more so than others. But definitely in trauma, you see it. You don't see it that much. You see life.
yeah, thankfully I see more life, not so much death in OB. So that's a good thing.
But I see it, but there's a space, right? Like there's that little cushion, that psychological cushion that occurs with your patients and their families. And when someone dies, it affects you, but it only affects you so much. Otherwise, it'd be crippling. You can't
Yeah,
really move
you
on.
would, yeah.
But when it happens to you in your life where you have loss, particularly loss of someone who was here today and gone the next day unexpectedly,
Yeah.
it really causes you to do almost like an audit. Right? Like an audit of your own life. And I think that there are doctors out there, one of the particularly the statistics show that like there's a good percentage of people who are going to sustain some type of injury, some type of life-changing event that will cause them to need disability insurance.
Right.
So guys, disability insurance is insurance that covers you if you were to injure yourself and you can't participate in your occupation.
Yeah.
In a normal fashion. It affects the ability for you to get money. So let's just do a quick example. I injure my fingers. I can't hold a scalpel. Disability insurance would kick in, hopefully, and be able to provide some semblance
It
of a
better
similar...
kick in. Maybe, hopefully, we paying for it.
Well, some semblance of an income that would be kind of similar to what you would make if you were working in that
Right.
field, right?
Right.
So that's what disability insurance is. Then we have life insurance
Yeah.
where, it covers a certain part of your life. You may have it for a short period of time, 5, 10, 25 years. And during that time, if you were to die, then there is a death benefit. Like somebody gets something from you, whether it's your family, whether it's your business,
Whoever your
kids,
beneficiary is.
right? We call that term life insurance. And then they have whole life insurance, right? Which is your entire life. You, while you're alive, is covered. And while you're dead, there's a death benefit that's covered also. And that's really used for really small, or we find it very useful for really small occurrences. But overall, I think that what you'll see from the theme of this conversation is that, I think what you'll find is people are either underinsured or they're overinsured. Either way, they're not really prepared for the life events that occur.
Yeah, or that they don't understand, really what the use is in their own life of life insurance. And I think that's what happened in our
Oh yeah. Oh yeah.
us.
So when I was in residency towards the end of my residency, my program invited an insurance agent in. I think they thought he was a financial advisor. And basically he was presenting himself as a financial advisor,
yeah.
but he represented an insurance company, one specific type of insurance company. And he got me hooked. I fell for that narcotic. That narcotic of whole life, as well as an expensive ass disability insurance plan. Just to mention, at that time, not married, no kids, had a ton of student loan debt, had some private student loans. Low key, if you guys were to die with federal loans, those go away. If you're to file bankruptcy, federal loans go away. Now, private loans, if you were to die, whoever co-signed for it or possibly someone in your family might be responsible for that. You just have to look at the literature for that. But for federal loans, for the most part,
those go away.
They go away. So I signed up for a disability insurance plan. It was roughly around $300 a month for disability and this whole life plan. And then when I finished residency and went down to Miami, I traded it in for what I thought was a more comprehensive disability whole life plan.
Got hooked again.
I got told about, it's like a bank, there's this death benefit, then there's this cash benefit. You could take the money out and borrow it.
That's
not
the guy
to
you met
mention
at the party.
And I'm like, I still got student loans, or at least I still had student loans that I wasn't making any payments on and getting all this interest. I still had that house in Georgia that I was paying a mortgage on. Meanwhile, I was getting trashed while I wasn't there. That's for another episode.
Yep.
Right? But basically, I got sold an insurance product that I did not need. Based off of the current circumstances of my life, which was single, not married, no kids, had a ton of student loan debt. There was an expensive whole life product that I had that I did not need. And then what I did is, after he said, "Do you have any referrals?" I gave him you, and I gave him some other people that we knew. And
Yeah, and so that's when I started paying into this whole life insurance.
Did you get it before or after we got married?
No, before.
Okay, before we got married.
It was before. Yeah, before we got married. So, if it was after we got married, I probably would have never gotten it because pretty shortly after we got married is when I started realizing something's not right. This guy who sold us the insurance policy, what I realized with him was that every few months he was having me renew stuff and making me do like this paperwork, quick, fast, and in a hurry. Like, I need this paperwork. I need you to sign it and fax it over to me really, really quickly.
But also at the same time, when you were doing that, he would say, "Hey, guess what? You qualify for more insurance."
Correct.
And you would go up in your premiums.
Correct.
Because it would, quote unquote, cover more.
Right.
Which it was.
Cover more. And so finally,
now I remember that, yeah.
Finally I had the discussion with him and with you about, wait a minute, we're paying a lot for this disability insurance in particular. Life insurance, I understood to some extent. But the disability, I was like, wait, so if I never get injured and I decide, okay, fine, I'm going to retire, am I going to get any of this money back? He's
Hell
like,
no. Nope. It's just like car insurance, right? Like, you pay all this money, you hope, you pray that you never get into an accident. And if you don't, that's great, but you don't get no refund back. You get nothing back.
Nothing, right? Like, you
Same
don't
thing
even
with
get,
health
like,
insurance.
how Allstate insurance is like, all right, for the first accident is free. Like, you don't even get that, right? Like, so for me, I was like, okay, well, here's my problem. I don't have a problem being insured. What I do have a problem with is paying a lot of money into an insurance policy where I'm probably never going to get the benefit. And my beneficiary, there is no beneficiary to this, benefit if it's not me, right? Like, if I die, it's not like somebody's going to get a benefit from my disability insurance. It's just gone. So I was like, yeah, that's a problem. And then with the whole life insurance, my problem wasn't even how much we were paying because I didn't realize that whole life insurance was, that there was a difference between whole life and term. I didn't realize.
Oh, really?
No, I didn't realize. Not at that time.
Before we were married or after we were married?
Before we were married. I didn't realize that. And actually in the early parts of our marriage, I didn't realize the difference between whole life insurance and term.
Yeah, I was listening to Dave Ramsey at this point, and I was quite suspicious at this point.
I didn't realize that, and
not to say that Dave Ramsey is the end all be all, but I'm just telling the story of how it really happened.
And so I also didn't realize at the time that it wasn't supposed to be that expensive. Like, I didn't realize it. right? And so my red flag, actually, my first red flag actually went up when I said to you, I said, wait a minute, we've been married almost a year. We were married almost a year at that point, because this is October 2014. We were married almost a year, and he hasn't asked us to even change our beneficiaries. He hasn't asked us how much money we make. He doesn't know how much debt we have. He doesn't know what our bills are. We haven't changed our death benefits to make sure that we're both covered. And that was the first time that was a red flag for me. But that's at the point where I started learning what whole life insurance was, what term life insurance was. But that was a red flag for me. And eventually he said to us.
So we got on the phone with him because at this point I was very suspicious as to what's going on. Like I said, I'm listening to Dave Ramsey. I'm starting to listen to podcasts and read. And I'm like, all of the negatives or all of these things that people are talking about with whole life, they apply to us in a negative fashion.
Right.
And it didn't make sense.
Yeah.
And also at the same time, we were getting ready to pay student loans, and we were paying more into our life insurance products and disability insurance products than our student loans.
Yeah.
And that just bothered me.
Yeah.
So we called my man and said, hey, we need to decrease our insurance or something needs to change. And I mean, you would have thought that we were taking money or taking food out of his kids' mouths. This guy fought tooth and nail, which was a big red flag for me.
Yeah, man. You was Idris Elba. He was a lion.
Yeah. And funny you mentioned that. We got to check out that movie. So yeah. And then afterwards, he said, y'all need to budget.
Y'all need to budget better.
And, for me, I oftentimes say two things can be right at the same time. One, he really did not have any. He wasn't our financial advisor at the time. He wanted to be our financial advisor at the time.
And we did not allow him.
And we didn't ask for his opinion about that.
Thank you.
We were asking, what are the options that we have? But also, too, we did need to budget, right? Because based off of how much we were making, technically, we could have started paying our insurance. We could have started paying our student loans.
Yep.
And also continuing to make these payments. It wouldn't have been a wise choice, though. It would have been a really dumb thing for us at that time to do both.
Right.
So that for me was kind of like, oh, snap. Like, that was the straw that broke the camel's back. Like, first of all, you shouldn't be making those comments. For you.
For me, I was just like, yo, don't talk about my pocket. Don't come for what I have and what I don't. You don't know me like that. Right? So you want me to go from 0 to 100 real quick? Tell me what you think I have and what you think I don't have and what I should do with it.
So the concept of him having a point didn't apply to you?
No. The concept of him having a point didn't apply to me. The reason it didn't apply or the reason it didn't resonate with me was because, dude, I'm telling you that I want to pay less. And you're basically telling me, no, you don't need to pay less. You need to budget. And I'm like, you're not in my pocket. Right. You don't know me like that. You don't even know how much we make. So that you could have even told us what a death benefit was that we should have. So how are you even commenting? So for me, I was like, no, don't tell me what I have and what I don't have. I'm telling you, I don't want to pay this. And that's the end of that. Don't worry about whether or not I budget. It's none of your business.
So also the other thing, too, that you guys need to know is at the end of that year, we got a statement. So at this point, we're paying like $4K a month each. So actually, I was paying $4K a month. Renee was paying slightly less into our whole life. We got a statement basically saying this is how much money in total you've put in for the entire year into your whole life plan. And this is how much is basically like your cash value. So basically whole life, the way how it works is there's a death benefit, right? So when you die, it's going to pay your beneficiaries a certain amount. And then there's a cash value part, right? A cash value part, and this is the part that makes it so expensive, where a significant amount of your premium goes into this cash value and it's put into an account that's invested in, index funds for the most part, right? Or other stocks and bonds that the insurance companies think that, quote unquote, are a good investment. And then there's additional fees and penalties and all these different things that go into it. So basically, there was a little bit less than half
Yeah.
left in our accounts after all the fees and penalties and all of these different things kicked in. What we found out is that all of those fees went into the pockets of this guy. And the big thing
And
for
he's
me,
telling me I need to budget more. You need to
Right.
stay out my budget. Because right now I'm looking at my spreadsheet and it says that you in my budget. So I need to delete row. Okay? Delete that row. So I need to budget more. I just budgeted your ass out. What
Well-
about that? Now you ass out.
so for me, the way how I looked at it and the way how I had an issue is I just felt at this point I was really suspicious about a lot of people because there weren't really any financial people in my life when I was deciding to apply to medical school. There wasn't any financial people in my life when I was applying for residency, going through residency. Now, obviously, I told you what happened during my 3rd and 4th years. But I just kind of felt like now that it was time for me to start making a good amount of money, all of these people had their handout to be like, hey, we want a piece of your money. We want a piece of this. We want a
Basically.
piece of that. We want a piece of that. And it's like, wait, hold on. You weren't involved in this entire time when I was trying to get to this point. And that made me very suspicious and made me very upset. So long story short, we kicked him to the curb.
Yep.
We found a new financial advisor. He got us a much cheaper disability plan with the top 6. So we went to Emeritus.
Right.
It was a big savings for you. And then it was like a nominal savings for me. And then we got term life insurance. And we got term life insurance to cover us for 25 years.
Right.
Right? And we did 10 times our salary. And we basically used that as a timer to say for 25 years, that is going to protect us. And that is basically our safety net to allow us 25 years to accumulate about 10 times our salary so that if anything happens 25 years plus, we're basically self-insured.
Right.
If anything happens before that point, if something happens to me, God forbid, if something happens to Renee, the kids will have some type of financial backing for them to go through school.
Right.
If we have a mortgage, it could pay for a mortgage. And then after 25 years, that's it.
Right.
So it's kind of almost like this impetus. You got 25 years, get on the ball.
Yeah,
Start
exactly.
investing,
It's
start
like
saving.
Right. It's like a time
Exactly.
clock. Because, it's funny when I don't know if you remember when we first talked about term life insurance, I was like, well, but that doesn't make sense because what happens after 25 years? And it's not until I started really understanding like, wait, the money that we would have put into this whole life insurance is so much more, right, than what we're putting in this term life insurance, that money that we're saving from whole life insurance, now we're actually investing. And it's not like a portion of that is going into, this guy's pocket. So
we're investing it in a more efficient manner.
Exactly.
Right.
You're
It's like
being
doing
more
your haircut versus going to a barber.
Yeah.
You know what I'm saying?
Right. And you're being more efficient with how it is that you are allowing your money to grow.
Yeah.
So that's when I really understood like, oh, okay, I see why, there's the faction of whole life insurance versus term life insurance. Like I understood it at that point. And so for me, I think for us that term life insurance is definitely the way to go. I think that's the thing that works for us. It doesn't necessarily work for everybody. So, we don't want everybody to be like, oh, just cut off my whole life insurance because, Nii and Renee said so.
Yeah, don't come for us in the streets. Man.
Right. Don't come for us in these streets. I don't know what's in your pocket. So, just delete row if I'm in your row, if I'm on your spreadsheet. But that really worked for us. And I think we've been able to be more efficient in our investments. And I think definitely we've been able to grow our investments much faster than when we had the term.
Hey, Alfred, can you make a sidebar? So let's quickly talk about the people who need insurance, particularly life insurance. Let's talk about life insurance. So I think that if you are young and single and you don't have any dependents, in my opinion, I think the only insurance that you need is disability insurance. So that's going to protect you if you injure your fingers or if you injure something that you need to help you keep, working as a practitioner. Right. And that's going to be able to provide a certain income or a certain amount of money for you that's commensurate to, like I said before, if you're working as that specific type of specialty, or type of specialist. So that's what I think. If you're young, you're single, you don't have any dependents, I think disability insurance is all you need. I know you feel differently, but let me just keep going. In terms of life insurance, I think that if you're married, so if you have a spouse, you're married, I think if you have kids, I think if you have dependents, I think that if you have those situations where you have kids, you're married, you may even have a mortgage, you may have a bunch of private student loans. I think even if you have a business, I think definitely for sure, I think a term life insurance plan is adequate in those situations. The reason why is if you're just married and you have a mortgage, you want to make sure that, let's say, for example, you're the primary breadwinner and your spouse is at home, you want to make sure that you're thinking about how is this person going to be able to pay for the mortgage?
Right.
How is this person, obviously they're going to have to get a job. That makes sense. But if the mortgage was based off of a 2-income salary,
Right.
that could be an issue. So having life insurance to cover that situation makes sense. If you have, if you are married, or let's say you are not married and you have kids, and they are not of an age that they can take care of themselves, well, there needs to be some type of financial support for them, right? I mean, they're saying right now, school costs realistically, or sorry, not school, but to take care of a child, we're talking about almost $200,000, maybe even more if you're not considering, if you're considering school and college and so forth. Almost $300,000. So there needs to be some type of, or you hope that there's some type of financial benefit if you were to pass away for these kids so that they can do what they need to do. Private loans. So like I said earlier in the show, if you were to die or if you were to file for bankruptcy, you need to check the literature in your private loans because a lot of them can't be discharged if that were to occur. So if you have a lot of private student loans, you
read the fine print.
You may need a life insurance plan to make sure that they don't go after your estate or go after your family, to pay up, or take a piece of your estate to kind of make sure that they're whole from that standpoint.
Yeah.
All right.
Yeah.
And if you have a business, particularly if you have a business and you have a spouse, your business partners may not want to work with your spouse if you were to die and that person were to take over. They may not want to work with you, right? They may want to just work with me. So that money that you get from a life insurance can help buy you out so that the rest of your partners can continue the business without necessarily causing friction with your spouse, or it could just, let's say you have a private practice and you have a certain amount of income that needs to be paid for the staff and all these different people. If you were to die, then that's a significant, that gives the private practice or whatever it may be an opportunity to, get some type of financial backing to get themselves afloat. So I definitely say, like I said, if you're married, if you have kids, if you have dependents, if you have a ton of private student loan debt, and if you have a business, I think that those are the people. I know that you feel a little bit differently if you are young and single.
Yeah, I think if you're young and single, it might be worth it to have a very, very small plan, right? Where if something should happen to you, that the burden is not on your family to have to figure out your funeral expenses. So we talked about Anthony Johnson already. And, the fact that his family had to do GoFundMe. And it's funny because every time I see a GoFundMe, I'm like, man, that's really sad for this family that they even have to do a GoFundMe just to cover funeral expenses. What else is not being covered?
Yeah, the average in New Jersey, the average funeral is $8,000.
Right.
Now, if you cremate, it's a little bit cheaper, but just letting y'all know the average funeral.
And, just because you're a doctor doesn't mean that your family is well off. We got to remember, right? There are people who come from families that, they're first generation going to college, first generation going to medical school.
That's a good point.
Right? And so
that's a really good point, actually.
If you come from a household where, perhaps you receive public assistance, maybe you receive public assistance and that's the household that you came from, and now something happens to you, what is your family going to do?
As we diversify medicine, we're going to get people from so many different socioeconomic stations.
Right.
So that may be a possibility. I mean, in all essence, that's us.
Yeah.
Right?
Exactly.
That's us. Like, we are the breadwinners not only for our nuclear family, but also for, our immediate, for our intermediate. Is it intermediate or extended?
Extended. No.
Extended family.
Yeah.
Right? So I agree with you wholeheartedly there.
Yeah. I just think about that, right? Because, you don't want to burden somebody, right? That's why this is why we're calling this a money trap, right? We're calling this a money trap because there are quite a number of things that, can kind of get lost in terms of what you have to think about monetarily, and trying to figure out how to protect your family financially, that's one of those things that can get really, really lost because you think, well, I'll just put it off. You don't feel it right in that moment. But you could actually make your family fall into a money trap, right? Literally just by not having disability insurance.
Yeah.
Okay. Or dying and leaving a huge burden for your family, a big loss for your family financially. And so, that's one of the things that I think, I do think keeps doctors, burnt out, having to think about what would happen to their families and, trying to, I think, so let me say this. I think that there is a faction of people who don't want to talk about life insurance, don't want to talk about disability insurance because it's either a jinx or it's too uncomfortable to talk about, right? Like, if I talk about life insurance, somebody gonna come murder me. It's like ID channel, okay? Snapped.
Yeah,
okay.
I mean, even in my family, like, there are family members who don't want to get a will because they feel the next, as soon as they sign on the dotted line,
somebody gonna hit them with a mallet.
Yeah, they're gonna die. Or, with life insurance, I think we, to some extent, are not, but I think in general, I think there are people who are just like, yeah, man, if I get a life insurance policy, then something's gonna happen to me. And it makes you face a certain level of mortality that I think a lot of us are not ready to accept. So I think you do bring up a really good point. The point that I want to bring up is, okay, so someone may be listening. They're like, okay, explain again why whole life insurance could be an issue, right? So I do think that whole life is really useful in a very small amount of cases, right? There are people right now who are like killing it from from a wealth standpoint that have like whole life plans that are designed just to help them get real estate. Right? There are people who have whole life plans that are designed to help them like pass on wealth to like a major college or university.
Right.
Or, you see people like you will go to your local PBS station and you'll see that there's like this donation that is made by X, Y, and Z Foundation.
Right.
That's usually a whole life plan that got passed on.
And we're going to talk about that when we talk about estate planning.
So that is, but if you think about it though, that's not the majority of young physicians or even middle-aged physicians who are still trying to get out of student loan debt and who are trying to kind of develop even just some semblance of wealth, right? So what ends up happening is let's give an example. Like our term life insurance plan is a 25-year plan, right? It is 10 times what our gross salary is. And we got it about 8 or 9 years ago, and we pay $99 a month each, right? Now, if you were to get the same type of plan whole life-wise, you're looking at realistically 8 times, 9 times that amount, right? We're talking about $4,000, $5,000 maybe a month for that. That's a lot of money.
Right.
That's a lot of money that you're spending on this life insurance plan. And a lot of people who get sold these products, they look at this as their primary way of investing, but there are a ton of fees. There are a ton of penalties. It sometimes takes realistically like 15 years to offset the penalties and the fees before you start seeing any semblance of that whole life plan starting to make money. So it can be an issue. So like I think that's why so many people are like, I don't know. But then when they do the studies, they find that like a third of people who buy whole life end up getting rid of it. Right? That's one of us, right? People like us. Or people who find out, after a year or maybe a little bit longer, they find out like the details of their whole life policy and the implications. Then they start to say, yeah, I don't want this anymore.
That's what happened with me.
And then they sell it off, right? So what we did is once we found out the implications of our whole life plan, we sold it. We got rid of it. We had what's called the surrender value left, right, afterwards. And we used all of that money. That was about $50,000 between both of us. And we just shifted all of that right into our private loan, student loan payment. That was a huge catalyst to us paying off our student loan debt. But just to let you know how much was sitting in our whole life.
In there.
Right? Still like open to fees and penalties. And that's money that, like I said to you before, we could have mobilized and used in our student loans earlier. But that's just our story. So the whole point is that you're paying more for an insurance product that I think probably 95% of people aren't really going to use. We kind of aspire to get to a point where we can make a big donation to PBS, but the majority of us are not going to get to that point, right? So there are just much more efficient ways vehicles that you can use to give money. Like you one time say, okay, well, sometimes people use, a portion of their whole life to pay for tuition, right?
Right.
That's a really good example.
Yeah.
But like there's 529 plans where you can directly put your money in. The
Right.
fees are extremely low in comparison to a whole life plan.
Yeah.
Right. And you get the same effect, right?
Yeah.
Which is a significant amount of money that you can put towards your child's education that they can use and it can grow and all these
Right.
different things. So
yeah. And more of your money is actually going into the 529. So you don't put into a 529 and a big chunk of that is going to somebody's pocket, right? Like so you're going to see a lot more of the benefit of your money.
well, let's pivot real quick because I do want to ask you a question about, I remember with your sister, she at one point had a whole life plan and, her big concern was she wanted to use either her term life insurance plan if she was going to get one, but definitely was concerned about a
Yeah,
whole life
whole
plan
life.
being like, this is going to be the thing that I give to my son as an inheritance.
Yeah.
So this was her primary vehicle
Yeah.
to give wealth to her child. Thoughts on that?
Yeah, so we were talking, and she has a whole well, at least at the time, whole life insurance plan, and we were talking to her about term life insurance, and yeah, she was like, well, but if the 25 years or 30 years comes, and then I have no death benefit, then what inheritance will I leave for my child? And my thought about it is, life insurance is not for inheritance, right? Like, unless you're using it, like you said, for like a PBS or whatever. But that's a very specific use in a very specific monetary situation. I think as individuals who are just trying to leave wealth for your children, like if you're just like, nope, I have a son, I have a daughter, I want to leave money for them, there are so many efficient ways to be able to do that and to actually end up leaving them more money than you would have if you didn't use a whole life insurance policy.
Look at you on one when you read. Look at you.
Anyway.
Look at
I be
Dr. Renee
reading, I
when
be
she
reading.
read. Look at her. She all understand all these
I be
different
reading,
vehicles.
I be
Let me
reading.
tell y'all something real quick before we go. This girl was, when we had whole life and she didn't really understand it, she was fighting me tooth and nail. Like, I got to be able to use it like a bank and all these different
didn't say use
things.
it
And
like a
we
bank.
not getting rid of it. I'm like, listen, sis, this is costing us money, yo. Until I saw, she saw the end of year statement. She was like, wait, what?
I did. I was like, oh, this is what you were saying. When I saw how much in fees, you were like, you see this line item here? I was like, yeah. And you were like, I think it was like $12,000. You're like, we paid $12,000 into this. I was like, okay. And
No,
you
you
said,
paid $12,000 into yours. I put more into mine.
well, either way, you were showing me something that was $12,000. And then you said, you see this line here? I was like, yeah. You said, what does it say? I said, fees. You said, how much is it? I was like, it was almost $6,000.
Oh, yeah.
I was like, oh my God. You're like, yeah, that money, yeah, we're not going to see it. It went to somebody's pocket. I was like, what?
No, we went to whose pocket.
Well, anyway.
Yo, if you
somebody.
watching this podcast, we know who you is, all right?
But anyway, back to my sister.
Make it like a Tupac commercial.
So, or
Get
back
money,
to inheritance.
ding, 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 get money. Ding, 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 get money. Ding, 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 ding.
You finished? Okay, good.
Nigga, hit 'em up.
So, you're not finished. Anyway, so yeah, so I think for the
We see you, life
average-
insurance company.
Okay.
We know who you is. Mm-hmm.
For the average person, I don't think you use life insurance for inheritance. I think there are more economical ways and more efficient ways to be able to do that. I think if you want to leave an inheritance for your child, if you're putting money into a whole life insurance policy, that says to me you would be willing to put that same amount of money into the stock market. Because guess what? You're putting money into the whole life insurance, and you know what they're doing? They're investing a portion of that.
Yeah.
The other portion, they're not putting into the stock market, they're pocketing. So why would you put an entire premium into a whole life insurance where only a portion of it is getting invested and the other is not? So, for me, the whole life insurance in that respect is the bigger risk. So yeah, I don't think it's for inheritance, like family inheritance in that respect. Now, when you talk about generational wealth, building and things like that. I have other opinions on that.
Yeah. I mean, I think that is part of the whole sophistication that we
Right.
get to, but it's really
Right.
for a small amount of cases and so forth.
Yeah.
But, since we talking about the past and stuff, we talking about 2011,
You bring up
2012,
old shit.
2014. I just want to let y'all know, when I was looking for a job, remember when I was looking for a job, I would go to all the specialty websites, or at least for my specialty, the job boards, and there you see like the individual jobs at different hospitals. I would contact them directly, send them my CV. I didn't know what I wanted. I didn't know what region I wanted to be. I kind of wanted to be close to home,
Right.
but I really did not know what the median salary would be for a trauma surgeon who's
Yeah.
fresh out and wants to be in the Northeast. I didn't know any of that stuff. I did not know a lot of different things, and I kind of just figured it out on the way, while we're going through this process. And looking back, I think that I made some mistakes. Can you do it on your own? Yes. But why? Why do you need to do it on your own and stuff? So we partnered up, guys. We only partner up with companies, organizations that we think are going to empower you. And we feel like St. John Associates, they're going to empower you to make some smarter decisions. Definitely way smarter decisions than I made back in 2012, 2013, and so forth. So they are definitely with permanent positions. They are recruiters that are going to help you find permanent positions. They got some other social responsibility things that we're all about, but you want to quickly tell them about the positions that they are that they're looking for.
Yeah, so
and work with.
so they run the gamut of specialties, but they tout or they toot their own horn on ortho.
Hold on, the docs who don't replace
Okay,
potassium.
you know what? I'm not. I'm done with you.
Yeah, all them ortho docs listening to this, they're like,
Okay.
yeah, why are you picking on us? But it's true though. Come
Whatever.
on.
So listen, if you don't replace potassium, you could definitely get a job through St. John Associates because they toot their own horn.
I guess
ortho.
I guess part of the reason why I bring it up and not is just I guess I'm just sick and tired of the hierarchy that occurs
Okay,
in medicine.
you know what? Nee,
You know what I'm
this
saying?
is not
and people
time
be
or the
and people
place.
people
Like,
act like they just
Why
are.
are you always picking on the ortho?
I'm not picking on ortho. I'm just talking about like, for example, like you have cardiothoracic surgeons who like think they're big and bad and they think they're better than everybody else, and then you have like it's just like what is this, high school?
You
right?
know what? We need to have like ninja warrior.
No, we ain't gotta have no ninja warrior, nothing.
Because
I just want to let people know that, listen, guys, like all of that hierarchy garbage that people get worried about in med school and residency, like that is like not the real world.
So St. John Associates, like I was saying, basically has been in business for about 30 years. They've been doing this for 30 years.
Yes.
And the other thing that I don't know that we've mentioned in the past is, or I think we mentioned once in the past, is that they were founded by women and primarily run by women. So if you are, somebody who really wants to be,
socially responsible.
Right, socially responsible. You like a little girl power. St. John Associates is, your go-to place to be able to find a job. And
say that link again.
I didn't say it before.
Oh, okay. My bad.
It is stjohnjobs.com/docs.
You'll find that in the show notes also, but go ahead.
In the show notes as well. But stjohnjobs.com/docs. Check them out. Like I said, 30 years, women run.
Somebody on YouTube called me a masculine feminist or something like that?
A masculine feminist,
or
yeah.
the men feminist.
Male feminist.
Just because we were talking about like the pay gap for women, and I was just saying that, hey, like we need to be advocating and making sure that women
funny,
get paid.
he called you a male feminist, but he didn't say, women should not get as much as men. I'm like, why not just write that?
Yeah, I don't know.
Like, why not just write? Like, dude, you know what you're saying.
And that was a comment on YouTube. So.
Right. That's what I'm saying. Like, listen, Mr. Keyboard Courage, why don't you just write?
Look at you. And you're the same person who's giving me a hard time about calling out cardiothoracic surgeons and orthopedic surgeons who think they're big and bad, but they can't. Well, cardiothoracic surgeons, they can run everything on their own. I'm not fronting. They can do, I give them props on that. But orthopedic surgeons, like, come on, like, y'all just be cutting.
Well, I don't know why he didn't just say
using glue,
like women shouldn't get as much as men, or
putting
something.
in splints.
If that's what he really felt.
Elevating legs,
So he just
and then y'all don't
just
be
said
taking care of these
what
patients.
he really felt.
And then all of a sudden you try to claw.
So
you try to.
I think it was just a dumb comment.
All I did was just change a hip and all that stuff. Like, man, you better know how to replace potassium.
Conversations right now.
Am I triggered?
Triggered. So The other one insurance that we didn't talk about is actually long-term care insurance.
Yeah, we're not talking about that right now.
I just want to put a little asterisk, okay? And that is long-term care insurance, especially for like your mid-career physicians, right? Like if you are like 45, 50 years old, you're relatively healthy, listen, your health only deteriorates from here, right? We're not going to get healthier, right? So if you're about 45, 50, this is the time where you want to start thinking about maybe getting long-term care insurance when it's cheap, you're still healthy, and you might be able to get a very good deal.
All right, real quick, for the people who are like, what is that? Long-term care insurance is basically if you ended up like you needed some like nursing home or nursing care after a certain age, you can't care for yourself. This would help provide that so that someone can help you, in times when you're incapacitated, so to speak.
Right.
So.
And that way, the whole Medicaid coming after your stuff, so that's just a little asterisk. We're not going to, talk too much about that, but I think it's worth mentioning.
Well, okay. We'll save that for another episode, guys. Anyway, so listen, this was Money Trap. I forget what number it is.
I think it's 7. Is it 7? I don't know.
Whatever it may be. Alfred, hook it up. Christian, hook it up. Y'all know what Money Trap this is. But that's how it is. That's the way I like it. I like us doing shows like this. But guys, look, life is real. And I think oftentimes when we work in life and death situations as physicians, we think that, we look at patients as kind of like them. Mm-hmm. Like there's this space, like something happens to them.
But we're protected.
Yeah, like we're protected. But you'll be shocked. Life happens at you. Life happens and, 1 minute, someone that you love or someone, or maybe even you, may be here and then the next day you're not there. And if you don't have all of your affairs in order, it could be a significant insult on top of you not being here anymore. Mm-hmm. But also at the same time, just as bad as, the situation where you're underinsured, I think, purchasing insurance that you don't need and hence being overinsured, like you could be using that money in a much more efficient manner. And you don't want to find that out 20, 30, years into your career. Mm-hmm. And you're wondering like, wow, like maybe I could have left medicine a lot earlier, or maybe I could have started that business, with some of those monies that I was putting into this expensive insurance product.
Or you could have built a better inheritance for your child.
Right. So that's why we bring that up. And that's the whole gist of this conversation, y'all. So listen, I think that a good site to go to, my parents use this site, and I think a lot of people can use this site to really get some good information on insurance. I definitely think it's Policy Genius. They are not sponsoring this, but just based off of what my experience is with it, it was great, and it'll run you through your, what your age is and, what comorbidities you may have, or if you smoke or if you drink or whatever it may be, and kind of give you a really good, reasonable sense of what you think your quote on a policy would be. So check that out. Renee, you have any final thoughts at all before we close this one out?
Yeah, just don't get trapped by this money trap. That you're paying, too much, especially into
play
insurance.
On words right there.
Yeah, too much into insurance, and not enough into your life. I think again that's why this is such a big money trap. Is because you could really get caught up trying to build wealth with something that is really not going to bring you the gains that you want. It will eventually just waste your money, or you potentially won't put anything into it, and then you will, allow your family to inherit this money trap. So,
all right, guys, that is it on insurance, overinsurance, or underinsurance. But basically, the most important thing is to make sure you get yourself all the knowledge that you need. Listen, share this episode with anybody who you think would benefit from this, and make sure you subscribe on YouTube. Or
YouTube?
Make sure you subscribe on your favorite podcast app. That's going to be Apple Podcasts. The majority of people listening to the show is on Apple. But if you have if you're on Google Podcasts or using Spotify, whatever it may be for Android, hook us up and make sure you subscribe to this. We are going to catch you guys on the next episode of Docs Outside the Box, y'all.
Peace.
Peace.